So here we go, we're back talking about some stocks, and today I'm going to share with you 4 stocks that are making crazy moves in the market, some on a share price point of view and some of them just with news that they're putting out there in the stock market at the moment. So hopefully this video is useful. I'll try to spend a minute or two on these stocks. And I think the obvious one to start with is Tesla. Tesla brought out earnings yesterday, and at the moment in pre-market the stock is up 6.7%, so that's quite a bit of a positive move for Tesla. And the thing is, if Tesla is up 6.7% today, Tesla is now at the capability at a 452 billion market cap. Tesla can actually move the market. It can drag stocks with it. It can drag the market with it. So if Tesla is able to hold on to these gains today, we might see the market turn green. There's some important economic data coming out though in a little bit, so that might move the market once again. We'll see what happens. But overall, at the moment, Tesla has or could lift the market up. We saw this with Microsoft. Microsoft brought earnings out on Tuesday, and the outlook was not the best, and the market didn't like that, and it dragged the whole market down. You might have seen at one point the Nasdaq was down like 2%. However, this is how times have changed. We are in a bit more of a risk on market a little bit now. There's a bit of a bullish kind of sentiment coming back to the market. So when the market dropped 2%, there was actually a queue of buyers that came in and dragged that market up, which was really impressive to see. We've not seen that for a while, where we have a big red day and we're then dragged up to green. You might have seen in the last few months, in 2022 especially, the amount of times that we were having green days, and then because everyone was like, oh, I'm still not happy with the market, I'm still a bit nervous, I don't know if this is going to hold. I made a quick jump on this stock, and maybe I sell a little bit of shares off it, a little bit of profit, quick profit, I'm going to sell it off. You saw in 2022, it was hard to hold on to green days. Green days reversed to red, but we're seeing now red days reverse to green, which is shows how quickly that market has turned. And realistically, it's not because there's been that much change in the environment that we're in. It's just it shows you how much emotion, investors' emotion, reflects on share price. You know, all of a sudden we have 1 month of share prices going up and up and up, and you see everyone all of a sudden go, oh, everything's positive again. Whereas if we have share prices going down, everyone's, oh, it's the end of the world, the economy's bad, this stock's not very good. It's amazing what share prices do and control investor emotions out there. So anyway, let's get stuck on Tesla. First one to report, obviously the market liked Tesla earnings. I'm not going to spend too long on it because I am actually going to talk about Tesla. I'm going to do a bit more of a big deeper dive into their earnings on Patreon over the weekend, as well as some other stocks. So I'm going to save a lot more of the detail for there. But really quickly, I just want to talk about this one of the key points. And overall, Tesla earnings were actually okay. You know, I wouldn't say they were amazing. I wouldn't say they were terrible. And what was Tesla's getting priced at? What was the reaction going into Tesla's earnings? Well, if you look at the last 6 months to Tesla, the stock was $308 and it went all the way down to $100. You know, the stock absolutely tanked in the last few months. The stock was down 64%. Obviously, it's had a little bit of a rally recently as the market has been a little bit more optimistic. But what was happening with Tesla in the last quarter? Tesla was getting priced more and more negative. The negative market was building that Elon Musk is not focusing on Tesla, so the financials are going to be poor, the sales are going to be weak, we're entering into a recession environment, Tesla's going to struggle to sell the cars. So Tesla was really priced down low. Everyone was pricing Tesla like Tesla's going to have issues. Now, when you do look at the Tesla numbers, there were a few things that were a little bit weaker, and we did expect them to be weaker. Look at the environment that we're in. Look at all the legacy car business. Look how much out there. Now, that's when you look at earnings and they've been destroyed. You look at Tesla earnings, and sure, there were a few things that weren't as good as what they were a couple of months ago, which is expected. We're not in the same environment as 2021 or even the start of 2022. We knew there were going to be some weakness in Tesla's numbers. But actually, when you dug into the numbers, they were actually not bad at all. The EPS was pretty solid, the revenue was pretty solid, we didn't see a drop off in sales that we were expecting, and the key thing really came from this slide in the presentation. This is the whole reason. When the actual numbers were like, when the numbers came out, the market went, yeah, they're alright. You know, the market was alright with them. It weren't excited as what the pre-market is up 6%. It didn't take it down. It was like, oh, okay, they're not terrible. They're not getting as bad as what we thought. the big thing that moved Tesla stock yesterday was this slide here. And one of the big things was on this post here where it said volume. It said, we are planning to grow production as quickly as possible in alignment with the 50% CAGR target we began guiding in early 2021. In some years we may grow faster and some years we may grow slower. So you're automatically thinking, okay, it's probably going to be one of those slower years. Depending on a number of factors for 2023, we expect to remain ahead of the long-term 50% CAGR with around 1.8 million cars per year. That was the key point. Everyone was staring, what guidance are Tesla going to give going forward? And the fact they put that in there, everyone went, whoa. No one's thinking you're going to do this year. So if you deliver on that, that'll be absolutely amazing. Now we know Elon Musk can come out with crazy statements, and sometimes them crazy statements can potentially not be delivered on. But the outlook here was way ahead of what everyone was expecting. That's what kind of took everyone by surprise a little bit. And this here is what caused the reaction in the share price afterwards. Also, another key point was Cybertruck remains on track to begin production later this year at Gigafactory, Texas. A next generation vehicle platform is under development, with additional details to be shared at Investor Day, March the 1st, 2023. So everyone's already going, okay, put that one in your diary, March the 1st, 2023, new details for the next generation vehicle. Now everyone's excited to see this. We didn't think we were going to get a next generation vehicle until probably 2025. So this is a little bit ahead of expectations. So you already get the excitement of like, the guidance is pretty good for the deliveries in 2023, better than what's expected, and then you add in a new product. So this is why the excitement built on Tesla after hours. There was the excitement there. So they brought okay earnings out, but then the outlook that was given and the news that were given got everyone a little bit excited about Tesla, and that's why you saw that share price reaction yesterday. So we'll see how that. It's just popped up to 7% up in pre-market. Okay, so we'll see how this one does going forward. But overall, yeah, looks good, especially when you take that guidance in. Stock number 2, Shopify. What a day this had yesterday. The stock was up 10% yesterday, and if you look at the last 5 days, 23% in the last 5 days. So why did Shopify have such a good day? And by the way, if you were someone that were really getting this one down low, I mean, if you got this in at $25, I'm actually so jealous right now of anyone who got this in that $25 range. But why did Shopify have such a good day yesterday? Well, it brought out some fantastic news. And the news was that positive that you saw as well. This was a combination of things. They brought out positive news and then analysts reacted to that positive news. So you got good news and then analysts came in with, oh, that's really good news. And a lot of analysts then hiked up their price targets. So there was a combination of all that coming together that lifted it up to do very well. The reason why, or the good news that caused this, is Shopify, the e-commerce site, announced in a blog post that it's going to, for its basic, mid-range and advanced services, will be increasing the price for the first time in over a decade. Now, I've always thought for a while, like, these prices have stayed really stagnant and they haven't hiked them up at all. I've never understood why Shopify doesn't hike them up every 2 or 3 years, but they are going to do it now. They are going to increase, it's quite a big increase as well, increase by about 33%. So that's quite a big jump in the increases. So I think that most people will be fine with these increases because they haven't increased for a while. And I think this will be a big test on Shopify's stickiness in the platform, because we've said for a while, what is the moat on Shopify? I think once you are in the Shopify system as a seller, it's very hard for you to leave that system. Once you've got everything set up with your analytics, your advertising, if you're doing the fulfillment, the payments, I think it's one of those platforms where you just don't really move away from it once you're integrated into it. I think that's the great thing with the Shopify moat. I think people question Shopify's moat, and I say it's probably one of the best moats out there. I think it's a fantastic moat. So when you look at the price increases, I think most of the sellers will be okay with these price increases, especially when you consider they haven't increased them for like nearly a decade. And the great thing with these Shopify increases is that what you're going to see is a 33% boom, more than likely, in Shopify's numbers coming forward. So there's going to be a massive explosion in revenue growth over the plans, and as well as a massive revenue boom there. What is really important about these plans is that these are the most profitable part of the business. So the gross profit they make on these, I think, is something like 70 or 80% gross margins. So you're also going to see a big revenue boom, But what people aren't expecting and what will happen is there's going to be a massive profit boom on Shopify now because it's the most profitable part of the business. The solutions is a little bit more thinner gross margins, I think it's 60%. But this part of the business here is now going to create good amounts of gross profit, and you're actually probably going to see the bottom line on Shopify increase. So you're going to see a good revenue drag up, and also the bottom line should get dragged up a little bit. And if you see Shopify start coming in with really good revenue growth and then profit growth, it's going to look pretty good in the financials in Shopify in the coming few quarters. So this is really interesting. This is really key to stare at the Shopify coming up earnings. Not this quarter, because obviously they won't be implemented in Q4, but especially in Q2, Q3, Q4, and Q1 in 2024. You should see a good revenue drag up and a good gross profit drag up, and hopefully the bottom line as well gets dragged up, and it could be really exciting for Shopify. So you can see why people thought this was a really good move as well from Shopify. And the next one, the third stock on the list, National Express, a UK stock. So National Express at the moment is up 1.4% in the last 5 days. You look at that, the share price has hardly moved. In fact, when you look at a lot of the stocks that are out there in the market that are having massive booms in the last 5 days, you'd go, well, it's a little bit underperforming. And the crazy thing is, National Express, you look at the share price and it's not reacted at all. And this stock brought out some fantastic news this week. You might have seen it, you might not have seen it. The 23rd of January 2023, National Express won a 1 billion German rail contract award. So we know they've been really expanding into the German rail space at the moment and winning a lot of contracts. They've got a great reputation and they're only going to continue to carry on winning these contracts. And the great thing is that they were awarded this in an emergency contract award in February 2022. And then obviously they were so happy with what National Express was doing is they were like, okay, we're going to give you the full contract. And the contract is a 10-year contract to 2033, and it's worth 1 billion over the lifetime here. So absolutely major contract win for National Express, and that contract's going to be worth over 1 billion in the next 10 years. And the market cap's 811 million. It shows you the size of this contract win compared to the market cap. So I mean, you could balance that out that it's about 100 million a year. That's a major win for National Express. So you'd look at this and think, okay, this is really positive news for National Express, and then you look at the share price, absolutely flat, and it's just we've kind of got past the stage in the last few months where for so long we saw stocks bring out great news in 2022, and the amount of times we're saying, and the share price goes down. Like, that was 2022 summed up. There were so many stocks. I mean, there were some stocks that were performing badly, of course, but there were some stocks that were performing absolutely amazing, and they were just getting dragged down with the market. And even if they brought amazing news out, they were still getting dragged down. And it was like, just doesn't make sense. But the thing is, now we're in a bit of a more bullish sentiment, and you had a stock like National Express that's been really beaten down in the last few months, and it brings out that it wins a £1 billion contract, and the share price shows no reflection on it. This is the crazy thing with the stock market. This is what we say all the time. It's not been as obvious in the last few weeks, but still, this is an example that sometimes the stock market does crazy things. It does things that don't make sense. You have a company that wins a £1 billion contract and the share price does nothing. Like, it doesn't make sense. So you look at this business here. Should this business be worth exactly the same as 5 days ago when it didn't have the £1 billion contract? No. And there's no reflection there. I mean, it's just a prime example not to get too ahead of yourselves. Not to get too ahead of yourselves, because still, the stock market can do crazy things. It goes up when it shouldn't go up. It goes down when it maybe shouldn't go down. And this is what can happen. This is how opportunities are sometimes created in the stock market. Opportunities are created because of things that shouldn't happen, and you can buy them opportunities. And that's me just giving you a little suggestion there that I think National Express is a bit of an opportunity after winning that £1 billion contract and not moving. Last one's Amazon. Just going to stick this on a list here because I thought this was really interesting. I thought I'd share this with you guys. So Amazon recently announced that it's going to introduce RX Pass for Amazon, Amazon Pharmacy, $5 subscription that helps Prime members who take multiple medications to save time and money. So you can see here, Amazon are disrupting this kind of pharmacy play. We've seen them being quite big on this health space for a little bit. And it's not really something that will affect something like Hims, for example, but two stocks that I've been watching a little bit. Sometimes I don't really share this with you. I'm quite often in the background. I'm actually researching multiple companies, and if I'm interested in them and doing a bit of research, and I don't really share it on YouTube that much unless I end up probably going to go buy them. But at the start of the year, there was two companies I actually started doing a bit of research in. One of them was a company called GoodRx. I had a bit of a look into this business. It was a company that did really well through the last few years. You'll see here 2019, 2020, 2021, 2022, obviously helped by the CV situation a little bit. But recently the company has massively fallen off the cliff, and I thought, is this an opportunity to buy this one? I did a bit of research, and it shows you like the power of Amazon. Like Amazon brought this news out like 2 days ago, on the 24th of January, as you can see here. Look at how much that affected this business. Just have a look. Monday, and look at the drag down all the way to where we are now. This caused, this stock to go down 16% because GoodRx is a very similar company where they obviously try to save people's money by comparing subscriptions or any medical needs they have, and they can send them out for cheaper. And you can see like the pressure that put on that share price. It shows you how much that took off Amazon, and that was one of the reasons. Well, apart from the financials not being where I want them to be going forward, but the power that Amazon's having on this space here. So yeah, a massive expansion by Amazon. And also another stock that I'm kind of interested in, which is Walgreens. I'm looking at Walgreens as a bit of a potential kind of recovery play, as well as collecting that 5.29% dividend yield. I thought this is a really interesting one. But same again, when you look at Walgreens and the online presence they're trying to grow and the clinic growth they're trying to grow at the moment, you stare at something like an Amazon that's trying to eat up into this space, and it's also another reason why I've been looking at something like Walgreens and going, I've got to see how they're doing the next 12 months when they're battling away against this competition in this space, as well as someone like Amazon. If Amazon, you imagine the infrastructure that Amazon have, and they can deliver a service as good as Walgreens or better than Walgreens, you're looking at Walgreens going, you're in big trouble if Amazon keep, executing it the way that they are. And that's why Walgreens is very high up on the watch list, but I'm still watching it for a year to see how they battle away with someone like an Amazon. And it shows you now that Amazon have that infrastructure in place and the delivery, the logistics that they have in place, that any area that Amazon goes in, they very much easily destroy a lot of the competition in here. And it shows you potentially, the other areas that you think Amazon is saturated now, it can't go any further, and then it goes, okay, we're going to introduce RX Pass and we're going to move into pharmacy now, and you're like, okay, it can still disrupt other areas. And that's the crazy thing at the scale that Amazon is kind of up to now. So if anything, it's confirmed my worry for these two stocks, and if anything, I look at Amazon now and it just kind of shows how strong that business model is. And when you look at this one, and it's been having a rally like the other stocks in the last few days, but you still look at the levels that it's at and how beaten down it is. It kind of shows you the monster that Amazon still is, even to this day, with the expansion plans that it has going forward. So anyway, those are the 4 stocks I just wanted to, well, kind of 6, but four news stories about certain stocks that I wanted to just share with you guys, and my thoughts on the many interesting things that are kind of going on in the market at the moment. Anyway, so I hope you enjoyed the video. Smash the like button. If you're new around here, subscribe, and I'll catch you in a bit.